Okay, so this is a quick breakdown on how to use fibs. All right, so it's the Fibonacci tool. So when I use the Fibonacci tool, I tend to break it down into three main parts. First, you have the main body of the fib tool, which is the 0 to the 1. And then you have the TP area, which is 0 to negative 0.68.618. Then you have the stop loss area, which is 1 to 1.2. So when you're using fibs, you want to use the 0 to 1 area for measuring retraces, this area for measuring where to put your stop losses and where to get out of trade, and you want to use this area to gauge your TPs. And you want to always add multiple confluences with the fib. You never want to just use the fib. You want to probably use at least like 3 confluences with the fib. So let's break down how to use the fibs. All right, so we got a uptrend right here, right? Bottom wick to top wick, boom. We got a 0.382 retrace. So when it comes to retraces, the shallower the retrace, the stronger the uptrend. So something like this, where it's at 0.236 or 0.382, chances are it's going to go past the negative 0.444 level. And that's a custom level that I use in between the negative 0.27 and negative 0.618, because what I noticed after a lot of trading is if I want to maximize my take profits, a lot of the times it will hit this level like 80% of the time, if not higher. So I always use, because the standard levels of using fibs are negative 0.27 and negative 0.618, but it almost always hits this level. Most people use the negative 0.27 level to gauge your TPs, but what I noticed is it always hits this level, so I tend to use this level instead of the negative 0.27. I use the negative 0.444 instead, but I always just keep it, since these are the default fib levels that's always on every Fibonacci tool that everyone uses. But yeah, the shallower the retrace, the stronger the uptrend, or the stronger the continuation. So like we right here, this uptrend example, we hit this, went all the way, look how far up it went. went to the negative 0.618 level. But you also got to factor in it's the holiday season, so it kind of just kept going straight up because there's no volume. So the algos just kept buying it up. But this also holds true for like most structures in price action. So, you know, what's another example? Boom, we have this example right here. Bottom wick to top wick for an uptrend, hit the 0.382 level, basically hit perfectly the negative 0.618 level, uptrend level. What about like downtrends? All right, we can use this top wick to bottom wick, hit just shy of this negative 0.618, negative 0.5745 level. So that's why I tend to use the negative 0.444 level. You could also even like draw from the top wick to like here. This structure is a little tricky because there's a lot of different ways you can draw this based on this, because the bottom of this move is a little ambiguous, so it's like not perfectly like clear to say like where the bottom is. So it is a little subjective, but that's something you got to feel out with practice and just trading experience. But boom, look, it perfectly hit that level, and that's why I tend to use this level instead of this, because if I had used this, I would have missed out on a little bit of profit. I mean, this would have been fine though, right? I think I still would have been happy with it, but if I want to maximize it, get out here perfectly, boom, would have got out perfectly. So that's how you use fibs. Quick little explanation, and And also, here's another example with the 0.618 level, because the 0.618 level is also pretty key. The main key levels on the retraces in the fib body is the 0.618 and 0.382. So those are like kind of the default key levels, but I also have a custom level 0.559. So this is, you gotta look at these levels as areas and not just straight up like price levels, because nothing in trading is like gonna be 100% to the T. So you gotta make sure that you look at these as areas and never and try not to look at it as perfectly priced levels, because it just doesn't really work like that. So that's something else you need to keep in mind, is 0.618 level, 0.382 level for retraces. And then the deeper the retrace, the weaker the continuation. So a lot of the times, the deeper the retrace, the weaker the continuation. But you always got to play things by ear and just test it out and see what happens based on the experience, and just multiple confluences. So never just use one Fibonacci analysis. Use multiple and use all other types of analysis to try to gauge like future price movements.